we found this opportunity in a very roundabout way. I would say it didn't show up on any of the traditional screens that we do for equities and bonds. It's not mentioned by anyone on the sell side. In fact, I don't even think that this company has any sell side research coverage. It is a small cap heating oil business, as you mentioned. And the way that we found it was just through my own life comings and goings. We moved from New York City out to the suburbs on Long Island, and we moved into an old house that's powered by heating oil. And so I've gone through a little bit of an education on how that works. And I was kind of checking the tape on my first bill that I got, and noticed on the contract that the counterparty wasn't actually the local provider that I had been talking to. It was a
Yeah,
company
what the heck's going on here?
it was a company named Star Group, who ends up owning and rolling up all the moms and pops in the region, and they get to keep their own name when they face customers. But it's really Star Group on the top providing the infrastructure. So then I find out that it's a public company, and so I can go to the annual report, and I was just kind of curious to see what are they making off of me relative to what they make generally. Am I getting a good deal or a bad deal? And it turns out I'm getting a fine deal. There's nothing wrong with it, but it's a public company. We looked at the financials, and it was a very interesting situation in the sense. I mean, and we'll get into it. It's not a hard company to understand. It is infrastructure like. There's a lot of recurring cash flows, and they pay a big dividend yield. And the valuation was really attractive. So again, so this wasn't something that I think we would have ever found through our more traditional methods, but just being the curious people that we are, sometimes we come across companies just in our daily lives that happen to be public, and we check the filings, see what's available, and turned out that it was actually an interesting opportunity.
So I'm guessing that this probably, given that it's smaller cap, that's probably not widely held by a lot of other portfolio managers.
It may not be. The company's been around for a very long time. In fact, they had gone through a pretty significant debt restructuring in the early 2000s, and there's quite a saga back then if you wanted to look into it. But since then, I mean, it's just sort of been chugging along. I mean, the company's ran extremely conservatively. They have very low leverage. In fact, they could probably have more debt on the balance sheet if they really wanted to, but it's a very conservative company. They don't appear to go out of their way to advertise themselves, which is perfectly fine. They generate a very reliable dividend. They pay it out year in, year out. And I was just listening to their last earnings call last week, and there's one question on it from one of the listeners. So it's not a very well-known business, I don't think. I had actually mentioned it to another portfolio manager colleague of mine who did know of the company, and the comment was, well, it's been a value bug stock forever. It sort of bobs up and down. And so I think the people who sort of have that value know about it. But there were some other things going on that I think led us to believe that now was maybe a more interesting time to get involved than maybe other times in history.
So Spencer, the way you describe it, it sounds, wow, this is kind of a boring business. Reliable cash flows. Everybody's got to heat their house. It's not like you're going to go ahead and shop around. Talk about what you kind of saw as potential downside when you were evaluating this.
There's a couple of things I think can lead to downside in a business like this. Is one, I mean, you could have warm winters, right? And the need for heat is not just as great as it would be otherwise. And the same applies to whether you're heated with propane or nat gas. It doesn't have to be specific to heating oil. And one of the things I think was very interesting, we're coming off of, I think, at least two, maybe 3-year stretch of having abnormally warm winters here in the Northeast. So, when we look and see, well, how's the company performed over the last, 36 to 48 months, those results are already showing you how they do when you have a warmer than usual winter. And it's perfectly fine. Right? They generate a lot of cash flow. They manage the churn in the business. There's always people moving. There's always people converting to nat gas, which I would say is another more traditional risk that someone might think of when they hear about, well, just regular heating oil business. And what we find is, only 1% of churn per year is from people converting to nat gas away from heating oil. And in fact, my wife and I, we considered doing the same when we moved into our house. I think the reality is that on an annual basis, depending on where the price of nat gas is relative to heating oil, you'll save some money converting to nat gas. The problem is it's going to cost you, ten to $15,000
Right.
to actually get that conversion done between all the new appliances and infrastructure you have to install on your property. Maybe an electric company will give you, a subsidy or a rebate on it, but when you sort of pencil out the math, like you're not going to break even on that for 5, 7, maybe even 10 years. So for us, it was just like there's not really a big hurry to do that. And I suspect a lot of people figure the same. So that's not a very profound risk at the end of the day, I would say. And the other risk I think that you need to be aware of with a company like this is that there's seasonal working capital requirements.
Right.
You buy the oil ahead of the heating season. You're going to draw on your revolver. You're going to build all that inventory because you expect a certain amount of business during the core seasons. I think for half of this year, the company basically makes almost no money. All of their business is between the November to March timeframe in the year, generally speaking. And there's maybe some maintenance and service revenues that you get sort of year round. But if you miscalculate, that could be a problem. And that's where having a low levered balance sheet comes in handy. They do hedge some of the commodity risk, so big fluctuations in the price of heating oil can have an impact, but they're generally muted. But at the end of the day, as long as you have a stable balance sheet and you still generate cash flows, then you can weather the ups and downs just fine. And so we'd seen a relatively good track record of the company managing those risks. And in the meantime, your installed base of customers, you're going to have some churn every year, but generally speaking, it's a pretty predictable business. So you kind of know on average how much money each customer is going to spend, how many gallons you need. And what's key for us is because you have all of these parameters that are relatively predictable, you can calculate the present value of a single customer, right? So if they have a little bit more than 400,000 customers and each customer is worth X dollars, it's a pretty easy calculation to figure out, well, what might the replacement value of the company be? And we think that it was trading at a very significant margin of safety relative to what the actual assets were worth. So we weigh that against the downside and the risks, and it comes out favorable.
One more question that I had, actually a couple, but what are their sources of supply? Is most of this domestic or because I know that if you're shipping domestically, you're subject to the Jones Act, which is kind of interesting, and I don't know that many of our listeners know that, but maybe you could talk about it.
Mhm.
But or do they source a lot of it offshore?
I think a lot of it's sourced domestically. I don't know for sure, what the exact mix is, but they have supply contracts. They've got good counterparties. I don't think that there's ever been, or at least not that I can recall, ever been a situation where the exact supply picture has caused a problem for them. But I'm actually, I'm not the resident expert on Jones Act. So I don't know if I could be much help to people on that front.
Well, sorry about the curveball there. That's just
That's okay.
one of those things where if you're shipping, within the country, you have
Yep.
to use a domestic ship, which in a global economy, it's kind of a head scratcher. But
Hmm.
anyway, any parting thoughts before we let you go here about this interesting holding?
I mean, you mentioned earlier, it seems like a boring business. And it is. I don't think that it, yields much excitement in any given year, but that's okay. And that's sort of what we look for when we're thinking about opportunities to generate, income with reliable dividends or other sources of shareholder distributions or returns. And boring is fine. Boring is preferable, and it's one of these things where, I just don't think that you're gonna wake up with a big surprise one day.
Plus a nice 5.5% dividend yield.